Long-term care issues have become an increasingly important part of the retirement planning process, and for good reason. Many people just want to ensure that they're not a financial burden to their family, or they want to make sure their assets are adequately protected. I'm Jim Crone, Director of Insurance Planning, and on this edition of Planning Priorities, we'll go through the 4 steps to help you determine how to protect yourself from a long-term care event. To start, we need to quantify the risk. This is a very important but often overlooked area. It is identifying the real financial risk of needing care at some point in the future and then determining how much of that you want to self-insure versus how much risk you want to push off to the insurance company. Knowing the facts of the current cost of services in a particular area that you're most likely to retire is the most important factor. We look at the actual cost of long-term care services today and factor in the historical inflation to help quantify the total risk exposure. We break down these costs into things like in-home care or assisted living or even facility care. For a couple, the biggest risk is that if one person suddenly needs extended care, this introduces new costs while the other person maintains all of their originally planned financial commitments. Next, develop your specific strategy. Statistics tell us that fewer than 30% of the American adults over 50 have taken steps to address the long-term care risk. The basics of a plan include knowing your current spending patterns, the type of accounts and investments that make up your assets, as well as understanding your personal, family, medical history, and risk tolerance. Next, consider your insurance options. Today's insurance market can provide great options to help you mitigate the risk of long-term care costs significantly impairing your financial goals. On one hand, you have traditional long-term care policies, which can do a great job of tailoring a solution to match the current and long-term care cost of services. However, like homeowners or car insurance, you may never use the benefits if you don't ever have need for long-term care. Other policy options, called hybrid policies, combine the characteristics of a life insurance or annuity policy and adds a long-term care rider. These are valuable alternatives, and they offer guaranteed premiums and guaranteed benefits. Most like the idea that they will receive a benefit, either in the form of a death benefit or a predetermined monthly long-term care benefit if ever needed. Finally, execute the strategy that's right for you. This incorporates determining if any of your existing insurance can be repurposed to a better fit into your overall retirement plan. Please feel free to reach out to us with any questions on how your long-term care needs could affect your overall financial plan. Our Underwriting Advocate is an amazing tool that allows us to determine which policy options fit best with your individual facts and circumstances. I am Jim Crone. Thank you for watching.